We did this earlier this year. Was it late last year?
We bought a CD and a bond.
Yeah, we did that for a few months, and we ended up piling up a cash position of close to $9,000. The market dropped about 10-20%. It was close to 20%.
Yeah.
We just piled in. We're expecting something like that to happen again. And if it doesn't happen, at least by this fall, we'll have a pretty good idea of where the economy is actually heading and how these tariffs are actually going to play out.
Welcome to summer, everyone. Thank God it is finally here. It is time for us to buy another stock. It is month 39, and we actually have a couple things for you today.
We do?
We do.
We do.
We got the stock. We got a couple little tidbits here.
So when we started out with this 39 months ago,
39 months ago,
we knew that this was going to be at least a 60-month, 5-year journey to even get anywhere with this, because when you invest, it takes time. And we had somebody on our channel recently that decided to make a comment that said that, oh, your portfolio only went up 700% because you're putting money into it.
Yes, that's how you invest. You put money into it. It grows over time. You get more money. There's profits. Yes, we did put money in it, but we didn't put more money than we made or put more money than we lost to make it look like we're gaining. We actually have profits. And I think we're actually doing pretty good after 39 months. And why 5 years? Well, mainly because when you look at the snowball effect and compounding interest, it takes 5 to 7 years before you hit that point where it's like no growth, little growth, little growth. All of a sudden it starts to just snowball up the hill. And that's at the point that we're at right now.
And that we're excited to show you that quite a bit, actually, because this is about the time we're going to start to notice. So for that troll that says that, first of all, I got one question for you. How the heck are you going to grow your finances without any seed money?
You can't. You don't.
And how do you explain the $250 a month in dividend checks that we're getting on top of some of the stocks that you see here that have more than 80% gains on top of not losing money?
You got nothing, my friend. Move on.
Somebody actually did tell me that once. You got nothing. I'm like, what do you mean I got nothing? Okay, I guess I got nothing. So for this month, we wanted to talk about a few things. So the duration of the portfolio, if you're just starting out, 39 months may seem like a long time, but it happens like that. And when you start to see the portfolio grow very quickly after this is not an accident. This is something that happens in our own portfolios and something that most people can see. It just takes a little bit of discipline and a whole lot of patience, especially when the market's crashing. On that note, I have two people that know that I look at the housing market religiously. Brian knows this too, I guess. You know this too.
He can't help himself. He can't stop.
I can't stop. It's almost like an addiction almost. But a couple of years ago, they were looking for houses, and one of them decided to purchase a house despite everything in me saying, don't do it. The rates are high. The houses aren't affordable. You're not even getting a good house for what you're paying for. I said, just wait. And she did not want to wait. She wasn't even really in a position where she had money to burn either. The other person that decided to wait, he is now looking at the housing market and he's rejoicing.
And there was much rejoicing.
He's like, wow, there's houses for sale everywhere. Why do I bring this up? We've been talking about that in our channel. We've been talking about the economic headwinds. We've been talking about the housing market. We've been talking about the supply chain issues. We've been talking about what looks like a recession. We are pretty good at predicting how things will go. And if you look at our portfolio and the stocks and the monthly stock purchase picks, you can see that we say something will happen and it does happen. However, the timing,
it's almost impossible to actually predict. Once in a while, you'll get it right, but you really got to put a time frame on it. You can't say that in the fall, all the stocks are going to crash. Okay. It's more within the next 18 months to 2 years.
In the next 100 years, maybe.
It's gonna crash. But there are triggers and there are indicators that is indicating that it will go down in the near future.
Our crystal ball with the timing of what will happen is not. I don't know anybody who can predict the future that way.
No.
But as far as the macroeconomics, this is why we cover those things. This is also why we stick our portfolio to the types of stocks we do. So if you're curious what kind of portfolio it is, here you go. Most of the stocks in this portfolio are dividend-paying stocks that produce products that people have to have or provide services that people need to have as well. Why do we buy companies like this? Well, I don't lose sleep over whether or not we're going to miss the income, lose the income, or have the stock fall apart and go bankrupt. None of these businesses we feel are in those kinds of positions. There's a couple we got some questions about, and one of them is actually an LA Capital. It's a mortgage-backed security company. This is one of the companies we looked at purchasing for this month. However, there were some things that came up that we would like to talk to Annaly Capital about.
We buy these stocks because we have a core section of stocks that are high, deep value stocks that are going to give us dividends and are not going to go out of business even if there is a downturn. They're very good, healthy businesses that allows us to buy Annaly Capital or Coal Americas.
On that note, we have a few companies in this portfolio that are slightly risky in that regard. One of them happens to be Annaly Capital. There's a few others in this list that are a little bit like that. If you're from Annaly Capital, we'd like to ask you a few questions about what you plan on doing with your share dilution. There's a lot of debt that's being cycled through, and we want to know what your plans are and what you plan on doing with that as stockholders, and because we looked at buying them this month and we just couldn't justify it based on that.
Help us buy you.
Sounds like a bad dating pitch.
It's my Jerry Maguire. Help me, help you.
Help me help you.
With that said, if you sort our portfolio by cost basis, you're going to see a few things. Most of our stocks are hovering around $4,000. There's a reason for that. It's called diversification. That's a different video. But on this list, you're going to notice that only a few of them are low on that list. Annaly was one of them. Comerica Bank was another one. We looked at Fastenal. We looked at Coca-Cola.
Honda.
And we looked at Honda as well.
Now, Honda was one that we looked at deeply because we really wanted to buy more.
We did.
We have a very low stake in them. They're down. And we like to depress stock that has a good company behind it. And that's one. And we looked at their financials. We looked at a lot of things. But unfortunately, there's a couple indicators that said, don't buy, not now.
One of those things was tariffs, all the economic uncertainty. We found out that Ford is having problems sourcing their precious metals to make their cars. They had to close down a few plants. So I popped into AI and asked AI how this might affect Honda. I was actually impressed by the results. It said that, hey, the CEO said that we're looking at a potential maximum loss of 60% net revenues. So if you're looking at buying the stock just before that happens, might not be a good idea.
Yeah, it might not go to fruition because United States and Japan might negotiate the tariffs and Japan will lower theirs to match ours to make it more of an equal playing field. But
Right.
if that happens, then the 59% is probably not going to happen. But if it does happen, I mean, you really have to plan for that.
And why did we wait? Well, we took the net revenue from the company and, well, right here, and we took the dividend payment from the company and we took the net revenue and subtracted 60%.
Yeah, I think it was 5.2 billion in net revenue and they're giving out, what, 2.5 billion in dividends?
I don't remember.
Something like that. So, so if that goes down to under what they're, giving out in dividends, there's going to be a dividend cut.
That's where we're waiting. We're going to wait to see if this comes to fruition. At that point, we'll check the numbers and then we'll come back. We will circle back like in true corporate fashion.
And gain synergy.
Gain synergy. You're going to have all the synergies with our stocks. So what did we buy this month? Well, we looked at Coca-Cola and a few of the other ones in the cost basis that were relatively low. And the one that stood out to us...
Camel soup. I'm sorry. Go ahead.
Yeah. That was it. It's just all the goldfish and...
Just wanted to steal your thunder.
Thank you. So why did we buy Campbell Soup? Well, cost basis was pretty low, and this is one of the very few stocks in our portfolio that actually was not performing well. However, there's an article that we read, a few of them, that said that Campbell Soup is doing quite well on soup sales. And we said this is the same reason why I talk about the housing market and the same reason why we talk about the 60-month window of this portfolio itself. Investments take time. We knew that in a recession, a company like Campbell Soup would do well in an environment of economic uncertainty or when things are getting contracted a little bit. In this case, they're actually showing that finally happening. Is that good? Well, that's not really a good sign. It's good for Campbell Soup.
Right.
And not really a whole lot of other people have caught on to that yet. So with them being low on our cost basis for our portfolio and them saying, hey, we're doing pretty good with soup sales, seems like a pretty good time for us to buy.
And with the tariffs with Campbell Soup, what you're looking at are like aluminum imports hurting their sales. Kind of like with COVID when there's aluminum shortage.
They don't import the goldfish from
They went-
Japan?
No,
Those aren't imported goldfish?
no.
They're domestic?
They're domestic goldfish, but they're imported aluminum.
The aluminum's in the goldfish?
Yeah. Don't eat the aluminum, folks. It's not good for you.
We still like the stock.
We literally do. We like the stock.
So what else did we buy?
We bought a CD.
We did. Yeah, we did.
We bought a CD because it's one of those uncertain times where we want to hedge our bets, and we only really had Campbell Soup as a good buy, and we didn't want to throw all of our money into it. So we're hedging our bets in case there is a downturn in the market in the fall. This will give us some cash to, when it does go down, throw that into the market and get even more money.
We did this earlier this year. Was it late last year? Early?
We bought a CD and a bond.
Yeah, we did that for a few months, and we ended up piling up a cash position of close to $9,000. The market dropped about 10-20%. I think it was close to 20%.
Yeah.
And we just piled in. We're expecting something like that to happen again. And if it doesn't happen, at least by this fall, we'll have a pretty good idea of where the economy is actually heading and how these tariffs are actually going to play out. Without those numbers in there, we looked at the CDs, and 4.5% was amazing.
Can't argue with 4.5% with a CD. 3 months. I think a lot of people are buying those right now.
In fact, it was so bad. The one that we were looking at had $980,000 available, and by the time we had tried to do a fill or kill on the order, it was down to almost $10,000. So somebody out there was buying $1 million worth of CDs right now.
Yeah.
So
and of course, we put another 500 in Intel because why not?
Yep.
When we say we like the stock, we really like that stock.
You never guess that type of behavior from us. It's almost like we like Intel. So Intel better turn it around.
And Intel, if you're listening, you got investor relations out there, give us a call.
Yeah. Save me. Tell me I'm not wrong.
You're not wrong.
We think.
Time will tell. So to give a portfolio update, we are looking at $72,500 in the portfolio with, it's $80,000, but $72,500 and $250 worth of monthly dividend income.
We want to publish numbers that we feel we can be accountable to and that are realistic to you. If the market crashes and the portfolio drops by that, because yes, we know it says $80,000, but if the market crashes, we can still publish, unless it crashes really bad, that we at least still have what we're telling you that we have. We want this to be a realistic expectation for you as you go about your financial journey.
And if you found value in this, go ahead and hit that subscribe button. And I noticed that 60% of you guys are not subscribed, so it'd help us out a lot if you do that. Hit the like button, hit the bell to notify you whenever we drop one of these videos. And also make sure you catch our live stream every Friday at 2 p.m. Eastern Standard Time.
Assuming we're on time.
Assuming we're on time. We go over a lot of news, a lot of macroeconomic events that affect stocks.
Thank you for watching, everybody. Hope to see you in the next month's stock pick or during our live stream. And with that,
as always, happy investing.